Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, December 19th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We are sitting right at or right near the lows of the year here. Again, coming very close to getting those lows, hitting 25.30 the day before. 25.31 is the low, overnight low today. You can see here that we have 25.29 as the low of the year on the futures here. Just sitting right on those lows. Obviously, we have the Fed and the FOMC statement and the Fed interest rate decision later on this afternoon at 1 o'clock p.m. Central, 2 o'clock p.m. Eastern. That is what the market's waiting on. And again, we will see how that plays out and how the market reacts to the statement and the decision. Overall, this market is sitting right on a major area of support, and if you look across many different stocks, many different sectors, lots of markets, lots of stocks sitting on and just teetering on the edge of major support levels. This is very important support, but it doesn't mean that we can't go through it. And so we've just recently taken out the 2600 level. We've knocked out jumped into that CLVN, kind of bouncing a little bit. But again, this is just a little counter trend bounce right now in a bearish down move that we are seeing right now in the ES, and it is very possible that we could take out these lows and really drop into the next area of support down below. We've talked about 2450 to 2500 being a zone to watch, and that's not anything new. We've talked about that area ever since the beginning of the year. Ever since we sold off here, we were looking for that test in that zone and never got it. Now we're coming back to it again. So we've mentioned this zone all year long as a major area for the market to retest. Whether we retest it now or whether it happens right after the new year, it's likely going to get tested, if not penetrated at some point. But the overall longer term uptrend, if we look at the weekly time frame, for example, the overall long-term trend remains up. You can see from the 09 lows, we continue to hold this uptrending market here, right? That's the lower line, tested several times. Right now we're at 25.59. We could drop into the 2350s, 2200s, and test that zone and still be a long-term buying opportunity. So while there may be some near-term pain here, and there's already been quite a bit of near-term pain, that pain could exacerbate in the near term down toward 2200, 2300, but be a long-term buying opportunity still. So again, we have to see how this plays out, but in the near term, again, this market is likely to trade sideways and hold in a range here as we head into the afternoon. Once the announcement comes out, make sure to mark that key level. We've marked the key level every single time we've had a Fed statement and announcement there, and those levels become very important. Just like we sold off away from this one, when we bounced, we took it right to this day and sold all the longs right at that target. And again, that was also a selling opportunity that we provided as well for a rejection off of it. That's the same type of thing that's going to happen today. We're going to get another key level, and then from there we may see an immediate rally and perhaps a pullback to it that could be defended. We could see an immediate sell-off and then perhaps a pullback to it again. And that's usually the playbook once we get one of those levels, and then it becomes a key level moving forward. So that's what we're going to use later on today. It's the 1 o'clock open price at Central. The 1 o'clock open price will be the FOMC key level, so keep that in mind. If we take a look at the NQ here, you can also see here that we are hunting near those lows. We haven't quite gotten there just yet. We still have, down towards 62.50 and as low as 61s where we take out those lows. You can clearly see a downtrending market. We've talked about that before. And overall, this market continues to look bearish. We are near a cycle low, which means we could perhaps see some sort of baby bounce back up. But still, this market continues to be on the path downward. And we have a major LVN between 6K and 6200 that, again, if tested, may provide some sort of solid bounce down the way, at least on a near-term basis. So down here in this major LVN could be significant once tested. And again, FOMC is going to give us a really good look at what's ahead in 2019, and the market will likely price that in. So taking a look now at the YM. Let's look at the YM here. You'll see the YM has held up and hasn't quite sold off as significantly here. You can see the low here comes in at around 23 and change, 23.2s, and overall that's a major level to test. You can see this LVN channel right here and a downtrending market that we've seen here lately with a very intense move lately. Any pullback is still likely a selling opportunity for that, a test into that channel, and if that's tested again, we'll be watching for signs of rejection, as a near-term bounce could at least bring us back toward 25K. That's the midpoint here of the key range. So again, we could have more near-term downside followed by a medium-term bounce back toward the midpoint of the key range. So that's what we'll continue to watch for. If we take a look at crude oil, you'll notice that we've had a major sell-off in the last couple of sessions. This was again expected in that we knew that this previous month's close right here, the blue dotted line, was being defended by bulls day over day over day, but bulls were not getting paid. And when that happens, you know the downside stops are right below, and you start to see all the bulls run out of the same exit door. That led to a major drop. 46.11 is the low now, and we talked about this before the drop even occurred here recently, that if they can't hold 50 evens here, we could be dropping as low as $42 or maybe even down to 38 bucks. Again, if you look at a wider view here, here's the weekly time frame. We can take this thing all the way back here over the last 3 years, and this 42 level right there, key support, 40 bucks is even more significant. And then if you look right here, that gray dotted line or gray line is $38, and that's composite VAL. So for the most part, that is your support zone between 38 and 42. We could be headed down into that zone before we see a meaningful bounce back toward 50. So again, much more downside could be ahead for this one as well. Lastly, let's take a look here at Bitcoin. Bitcoin is up 8.7% right now. It is rallying today. It's put together 3 good days. One solid day up on Monday. It had a whole day here on Tuesday, and then a continuation here on Wednesday so far. That's not a bad move. That's perhaps the biggest rally we've seen out of Bitcoin in some time, going from 3,100 to 3,800. But this market remains bearish. It remains in a downtrending market. You can see it is entering the trigger zone here of the downtrending PIMAs, and that is usually a sell opportunity. Not quite right now, but it is usually an opportunity for bears to defend and sell for another round of weakness. Again, until price can reestablish back above 4,400, this market remains in a downtrend. And while even breaking back above 4,400, you know, could lead to a near-term move, it really needs to get back above 6K for it to really be meaningful. But that would be almost a double from current lows, so not a bad move if that were to play out. But overall, this market remains very bearish, and just because it puts together a 2 or 3 day move doesn't make it bullish or turn it around just yet. It has to see much more of a progressive bottom, something more meaningful for this thing to really go. But overall, that downtrend right here after this first wave usually sees additional selling pressure. So I would watch again that blue dotted line, because any rejection at that level could likely be another selling opportunity for another wave of weakness ahead. All right, that is it for now. We'll see how this plays out heading into the afternoon Fed. Good luck, trade well, and I'll see you in the trading room.